Good morning, everybody. Welcome to the Trading Market Technicals morning call video for Monday, December 23rd. Markets had a little follow through from the previous day. Dow Jones up 42, Nasdaq up 46, S&P up 8, and the Russell up 21. Okay, so where do we go from here? Well, we have obviously Christmas on Wednesday, Christmas Eve on Tuesday. Today will be probably the last day that you'll have some decent, any type of decent move. And then, of course, Thursday and Friday will probably present some opportunity. And then, of course, you have, Monday. So we're going to see some opportunity in between. But the best advice to give is to really take a step back and really just look for the best setups, because the volume is going to be very light. And any type of moves, whether it be up and or down, will be exaggerated. Now, we're up about 5, almost 6 handles on follow-through from Friday. So the markets right now are at some major extensions. And what I mean by that is that Fibonacci extensions, we're at major extensions, which would, for me personally, when I see something like that, I like to tighten my stops, tighten my longs, and look for some sort of a pullback. Now, not saying to short the market. Markets are clearly not giving us a signal to short, so we want to continue what we're doing, but just kind of reduce the exposure, or reduce the risk going into the end of the year. Okay. Well, we do have some sort of changes in some of our indicators that we've been watching. I'm going to show that to you, and then we'll go right into the charts, and I'll show you some of the key areas of resistance in the E-mini S&P contract. Okay, Dow Jones, the bullish percent SPX. Sorry about that. We just had official cross on Friday, so let's see if this could be just a little bit of a whipsaw like we did have here a few days. We had about a week's worth of whipsaw until it finally broke down. Let's see if this is just going to make a lower high and then fail. So we did get a bullish cross, but again, we are at major extensions and at highs here. So this, to me, can we move a little higher? Absolutely. We closed at 18.18. So I would definitely suspect that the markets want to move higher, and probably will for another day or so. And then I'd be looking for some sort of a soft pullback before entering the market long again, if you're not already long. Okay, let's take a look at the New York Stock Exchange, new highs, new lows. Now, as much as the markets are higher, I would have suspect that we would get some sort of a move like this. This did not happen. So we have markets that are not really moving, right? We don't see a lot of new highs, new lows, moving up high, which I'll show them to you, the two indicators. They did move, which is a very good sign, but the new lows didn't move. And I would suspect that we would see new lows coming out of the markets here as markets are moving up higher, but that didn't happen. Let's take a look at the McClellan Oscillator. We are at 26, pretty much in neutral territory. Plenty of room to run still to the upside, so keep that in mind as well. Okay, let's take a look at the new highs, new lows. Now, finally, we got a big spike up, and that to me is encouraging that we can have a continued rally. This is what was bothering me. It was the lower highs, lower highs, lower highs. Finally, we reversed. We broke out back to zero, and now we're back at these areas where some of these moves kind of tend to terminate in this indicator. So we could be just kind of fooling ourselves, popping back up again, and then really starting to roll over again. So want to watch it, but definitely a good sign that we may have some additional buying going into the end of the year, which is really only a handful of days left. Take a look at I want to show you the New York Stock Exchange new highs, and let me see if I can find that. Here we go. Now, this finally popped up. As you noticed that for quite some time, from November and December, we really had a series of lower highs and lower highs, excuse me, lower lows and lower highs, and we finally popped back up to the upside, catching this downtrend channel, this downtrend line, excuse me. So this is also a very good sign that the markets may kind of grind higher going into the end of the year, aside from any tax loss selling that you might get. You might get a little blip down the last day or the previous day prior to the last day. So that's something to keep an eye on. But, coming into Monday, I would suspect the markets to continue to grind higher. Okay, let's take a look at the tick. Now, the tick, again, sitting above zero, which is good. But we really didn't break this area out here, so not much to really show you. But at least the new highs, the 52 new highs and lows, are moving at least where we want it to be, heading up in that direction. All right, now let's take a look at some of the metals. Unfortunately, come last Wednesday, when the Fed announced the tapering, gold got punished really hard. as you can see here, we are now at these areas. That's why I wouldn't want you to short gold here. I'd be looking for some sort of a bigger retracement. And even then, I think gold is going to bounce. Again, I've been saying this for months. I'd be a better buyer of gold at 1,000 to 1180, and if that absolutely starts to get crushed, that's where I'll start picking up some calls or buying the GLD. Right now, I'm a better buyer than a seller. However, if we can get a pretty violent short covering rally back up to this zone area here, we have a good confluence area of resistance, 50-day, and we also have this horizontal trend line resistance, which I will also take a shot at least to try to short gold. Okay. Well, where do we look for in gold? Well, I like to look at other metals, and I've also told you many times the main leader, and a lot of people don't know this, is palladium. That is the main leader. Now, what does this tell you? Pretty not much of anything. As you can see here, we've actually drifted lower and really didn't do much. Now, gold obviously is much more oversold than palladium, so it will have its own move at one point. But really, to follow the move in gold, we need to see platinum start to move. And if platinum starts to move up, there's a lot of overhead resistance, and it's all, the moving averages all are in bearish symmetry, 20, 250. Okay, we got that little bit of a death cross right here, all starting to roll over. Now, that's not a good sign. So that does not mean you can't play a retracement rally in gold. I'm just saying, if you're really looking for a longer term move, I don't think that's going to happen. You might get a good rally back to 1300, but as of right now, this is not telling me. As of right now, this could change, but this is not telling me. Platinum, same thing, really just getting decimated. Again, some of these metals are not really telling me that this is possible. Now, copper looks better out of all of them, but copper, which was really one of the leaders, Dr. Copper, right? It measures good production, industrial production. A lot of copper is in a lot of metals, a lot of ingredients to make industrial products. However, this does look better, but I don't think this is going to lead gold. It may spark a rally in the markets, in equities, but I don't think that's going to lead gold without palladium moving forward. So just keep that in mind. But again, I would definitely be a better buyer in a GLD in gold at 1,000 or 1180 in the GC contracts, which would be the gold contracts, and then you could play the GLD like that. All right, speaking of that, let's take a look at the WTI. We are at 20-day highs, and we are starting to break above the 200-day moving average. I really still like the oil trade. However, if we are going to play this, the best bet would be would see if we can get back down below 96.5 in the WTI contract. Now that would put us somewhere above the 20 and the 50-day moving average, and a little higher than here. So that would be the higher low, right? Low. We have our main low here, the 20-day. We broke back above it, bull flag, back above it again. If we do not get a pull, I wouldn't be buying it here. I'd wait for the move higher, and then the bull flag making that higher low off of this low. That's the only way I would play this right now, only because you really want to get a decent entry. You don't want to be just looking to blindly just buy it, and then next day you wake up, oil's down, $2. Okay, let's take a look at the CBOE contract. Put call, you could see there is total complacency since pretty much all of the back half of 2013, and it doesn't seem like it would change anytime soon. All right, so let's go right into these extensions that I'm looking at here. All right, monthly chart from the 2008 lows, 2009 lows. We are literally almost at this major extension. So I want everybody to be aware of that. 1840. That does not mean we can't get up there. We're up now almost 575 in the pre-market sessions, about 220 in the morning. The ES contract is at 1820 right now. Okay, so that's something that, and we just made new highs, all-time highs in this contract just about an hour or so ago. And we'll continue to move higher. Again, that does not mean it can't get there. It means that I'd be very cautious with longs, tighten up stops, because one day we could move lower. Now, between now and next week, you do have some weakness that's known to come into the market, which is tax selling. So I'm not saying the markets are going to totally get destroyed, but we could have at least maybe a sort of a decent pullback, which we've never had since the 2000 and October lows here. So just keep that in mind. Here's another extension. So the 1840, here is the 216, the big 216 extension coming in at 1830. and we're about 10 handles away from that. Okay, now this is the daily chart, 10 handles away from that. Okay, so be careful. Now take a look at the hourly. We have another extension here coming in a little bit closer to 1827. So 1827, 1831, 32-ish, and then of course you got the big extension at 1840. Be very careful. Remember, we have extensions. This is from the high to low here, coming in at a 1272 extension at 1827. We're only literally about 6 points away from that extension from the hourly chart. So for me, still playing the trend. Trend is your friend, but just use caution. And I would be picking more day trades than swing trades, unless you're building positions for 2014. Okay. Speaking of that, I do like bonds lower, but here's what I said on Friday. Use a little caution here because of the fact that we have a double bottom. And sure enough, on the weekly chart of the TLT, we actually closed higher. TLT exploded on Friday because we have some heavy support. You can see here's the thin zone. So if we get back above the 108, which by that time the 200-day will come in, that should cap it. And then we look for another area to get short. You don't short at the lows, you short at resistance. So this is what I'll be looking for in the coming weeks, probably going into 2014. Obviously, it's only a few days left of trading. The builders. So I like bonds short. I love the builders going into next year based on the Volcker rule. We mentioned that on Friday. You could see Lennar had a nice little follow-through day after that pause day and keeping above this symmetrical triangle. Really, really nice. We had that confirmation of accumulation after that breakout. That's exactly what you want to see. Even if it came in a little bit, remember, I would like to see any weakness to either add or build a position in Lennar. Here's another good one, Toll Brothers. I like the Toll Brothers here. And if you could see, we have this little thin zone. So Toll Brothers starts to take out this little zone area here, 35.27. You could see off to the races in this thing. And you could even see it this week. So I like the builders here. Again, on any weakness. I wouldn't be chasing, but on any weakness, take a look at those builders. They look pretty good. Again, here's the USO sitting above the 200-day. And you can see the Bollinger Bands are pinching, so we're getting a little bit of building some pressure here. I'd like to see us pull back a little bit, maybe 1 or 2 days of weakness, and start looking to accumulate USO. Okay, so that's another one I like. GLD, again, better buyer than a seller. We talked about this already on the gold contract. Now let's go right into the indexes. Had a nice day, but we still haven't taken out Wednesday's big move up. So a lot of stocks have been kind of sitting there. So just a handful of stocks, which that's really been the theme for since October. But you could see holding gains at the upper end of the range. So I suspect you're going to get one big move to the upside, and then once the move happens, we're going to catch this area here, and we should see some sort of a pullback, at least a small pullback. Diamonds, as you can see now, resistance. This is the November 2012 lows, uptrend line. Catching a little bit of resistance here, but again, made all-time highs in the Dow Jones. And as you can see here, we're not overbought now, momentum indicators. So this thing still, if it can break out of here, I think you're going to see one big shot to the upside again. And as you can see, the transport's doing very well, taking out the March 2012 lows. And let me just move that right back again. So you can see that doing well. If we can take this area out and the transport start to lead again, which it is our leader, you'll see this market move much higher and at least meet these extensions that I just showed you on the previous slides. IWM doing quite well. Actually, the biggest mover of the 5 indices that we follow. But right now we're getting into some resistance again. We got a double top, and we're coming into the uptrend line again. So let's just keep an eye on things. And I'd say again, reduce your risk, go nice and slow for the next few days, the next handful of days of trading. Here's the XLF. Again, I do like the banks as well going into 2014. And one of my good spots that I like is not as much Goldman anymore, because Goldman is now extended. Goldman would really need to come back into this mid-zone area here of 162 to 165-ish, and then look for a buy setup for me to get excited. But I do like JP Morgan, and I've been telling you that for quite some time when we had this breakout back in November. Came out of a bull flag, breaking out of a bull flag. I think you see higher prices again. Now, don't chase it. let the market come in, and even if you didn't buy it, you could, obviously wait till 2014 next week, and then start look to accumulating some positions on any weakness going in the first week of January. However, as we know, we're into some seasonal strength, and usually follows through the first week or so of January. So just keep that in mind as well. And here's the IGN networking sector of technology, doing quite well. Again, barely clinging to this head and shoulders pattern that was initiated back in November 1st. So we've just been literally grinding up and down here, but still making higher lows and lower lows and higher highs. So to me, if you are short, you have to be careful here. Okay, you're sitting at this right shoulder a little bit more, and this pattern is going to be negated. And obviously Apple here. Somebody had mentioned about Apple. 551, 552. You take that out for a trade. You could look to get involved with Apple, but Apple doesn't look really that great here. I like to see a deeper downside move back to the 531 and then start to nibble. Why? Well, because your 50-day moving average and you have an uptrend channel here, uptrend line, excuse me. That would actually bolt kind of well, but you can take that with your stops below. I'd just like to see a little bit of deeper move here back into this cluster area for me personally before we get involved. And lastly is the Qs. As you can see here, doing quite well. Again, at the upper end of the range and plenty of room to run. As you can see, we unwound a lot of this overbought reading. So some of these indices that I showed you have unwound their overbought reading and really could be poised for another move higher. At least I'd say you maybe get a couple of days of strength before we go into next week. So remember, we got today. Tomorrow, I think, is a non-event. We're off on Wednesday, and you got Thursday and Friday. And even then, people really don't even bother coming in, and they're just kind of unwinding their book going into the end of the year. So a word of caution is going to be very, very light volume. I would be literally just looking for the best quality day trades, and if you don't find them, you don't find them because it is the end of the year. But there'll be some opportunity, opportunity in between now and of course December 31st. And then I'm very excited getting into the new year. Okay, have a great day, and we will talk to you soon. Take care.